based on the data as I see it now, it looks very likely that we could peak in the second quarter, for example, of 2025. And my prediction remains still relatively conservative. I actually am more bullish, and my conviction of Bitcoin keeps growing every day, but we need to give it time.
Yeah, nice. It's much easier. But I miss seeing your face, man. How you doing?
yeah. Pretty good. Yeah. But I'm a little late now. Sorry for that, man.
Don't worry.
It was a struggle to get the charts together. I was running late with the charts. I actually wanted to have something special, but in the end, because I was working on some new data, like among the 13F filings, like institutional data. Mm-hmm. So we've been trying to gather that data, and I have all the data now. It's just like I haven't been able to put together a chart yet. But I in the last chart.
So are you saying that we're getting nothing special here today?
Well, yeah, I think we're still going to get some really cool stuff. But I wanted to get that in there as well, just because it's again something new that nobody's done before, and or that I have not seen yet in the community at least, and so. But that will come. But yeah, I'm just gonna slightly talk about it maybe at the end a little bit. It's gonna be just a small primer. It's not. I put the ETF chart in there. It's just about institutional holdings, a little bit of extra info since there's such a special cohort going into the cycle, and so that's why I've been interested in analyzing them. But yeah, we'll get to it.
Yeah. We're recording, by the way. We're en route. We're here.
Yeah. I saw that.
Isn't it amazing to see that everyone's panicking about a crash to $97,000?
Yeah. I mean, we haven't even touched the short-term holder cost basis. Like I've been practically, I was waiting for a crash, like a reset. Like I would have loved to have a reset to the short-term holder cost basis before Trump. But. And then I was, it was the timing was kind of difficult because there wasn't much time with, like I knew with Trump there again it was going to be bullish, and so there was little time to have this reset, and so we only got like a little bit of a reset, but we never touched the short-term holder cost basis, and we still haven't really, not on a daily basis. I mean, we touched 92K slightly or a bit below, but the short-term holder cost basis is at 92,000 and yeah, we still haven't, like on the daily close data, we have not been there, and so I think that would be a healthy reset going forward. So we'll see.
It's funny to see. Like the sentiment has been so bearish on Twitter. Like it's actually shocked me how quickly it flipped. And I was trying to think of why. And I wonder if part of the reason is because in that sort of 2020, 2021 bull market, it was like up only. We didn't really have any pullbacks. So I wonder if anyone who came in then is not used to seeing this, because like this feels very similar to 2017 to me. We had a lot of these bigger pullbacks.
Yeah, sentiment has been all over the place, but indeed we had a 15% pullback. That's nothing for a bull market in Bitcoin's history, right? And indeed everyone is bearish at 100K, and we have like actual institutional adoption. We have people talking about nation state adoption or strategic Bitcoin reserves. Like we have a pro-Bitcoin administration. There's so many bullish factors.
Yeah.
But I guess everyone is just disappointed that price is still not really doing anything, and so there were many catalysts over the past months. And so now there's like, just for a few weeks, there's no catalyst and everyone is kind of panicking. But yeah, I'm really optimistic, to be honest.
Oh, me too. I'm like permeable to a fault though, like because I have no intention of selling Bitcoin, and like spare cash that I have just always goes into Bitcoin. So I don't really care what's happening in the market. I end up being just like a permeable to a fault.
Well, once you really understand Bitcoin, and you're basically all in as well because of your conviction, like, permabull is like the the normal state that one is in, and it kind of is boring to sit through the whole bear market because what's going to happen, and it's going to take time to build up again, and hype comes in phases, and so we go through these cycles. But yeah, living through many of these cycles, indeed, like you really become immune to the volatility. Like I sleep like a baby. Bitcoin crashing, everyone was panicking. I saw, okay, there's some future liquidations, typical, volatility like these days happens, I slept like a baby and the next day we're up again, and all because of, the Trump tariffs this time. There's always some news event, obviously, but it's a buildup of leverage, and it needs to get flushed. And so we need these healthy resets, and we're in one now, perhaps. And I've been talking about this in my newsletters. Actually, I was wondering, and I was doubting that we were going to get there, but there was a gap. If you look at I don't have that chart today, but there is a gap in the on-chain supply. We went really fast from 85 to basically between 85 and 92K. There is like almost no supply. No supply changed hands there, so we literally just jumped there, and so it's quite a bit of a gap, and so it would be really normal to revisit that and to fill that gap, but so far we didn't, and I was hoping that we were going to do before actually the inauguration of Trump, but we never got to it, and so perhaps that will still come in the next week or next weeks. But to be honest, I don't think the pullback is going to be too severe either. It seems to me a bit more of a distributed pullback. It's just a bit of a slower pace, and that's why everyone is just impatient.
So maybe we should actually do that, because last time you were on the show in its sort of old version, it was when Bitcoin had just broken its previous all-time highs. I think the price was like 65K-ish. And then we had kind of 6 months of just sideways, and now obviously we're at 100K or thereabouts. Do you want to kind of give a quick recap of what's happening in the market so we have good context going forward?
Yeah, maybe let me add maybe the spiral chart, and so it's maybe useful for just going through where we're at in the cycle. Let me just pull up the screen. I don't know if you can see this,
yeah,
right?
I can see that, yeah.
So this is actually the chart I shared on my Amsterdam presentation, and then we were still, so we're here in the top now. So just to really quickly explain, so this is the spiral chart. Each ring is times 10. So once the line moves outward, Bitcoin increases in price, and a full rotation in the chart is 4-year period. So here we start in the top 2009, and then we move actually here. Then we are in 2013, and we get to 2017. We move, we get to 2021, and then we move, and here we are now in 2025 in the top. And so the Amsterdam presentation was right here in this zone, and in Amsterdam, the kind of the message of my presentation was like, okay, there's be times to in and out of the market, but this is a time you don't like. Considering all these green dots, like here in this area, in the next quadrant. So this is all of 2025, basically.
Green dots being all-time highs.
Yeah. Those dark green dots are the all-time highs, but the green colors are like bullish price action, basically. And so like overvalued price levels. And so here in that first quadrant, you don't want to be out of the market because Bitcoin can jump. We don't know how high it will go. Maybe it will just be 200K. Maybe it will be 500K. Like we don't know. But that happens. Traditionally in the cycles, it happens in this period. So this is not a time to be out of the market. And so let's turn the chart a bit. So the Amsterdam presentation was somewhere here in October, I think, 2024. Yeah. So right about here, and then we moved into this green zone now. So now we're above 100K, and so the surface of this chart here, that is actually like that would be a fair price for Bitcoin based on on-chain data. And then the further we are above the surface, so these, you see typically all these green dots at higher levels above the surface, that's when we get to overvalued levels. And the same for these red dots are all the bottoms that we made in the cycle.
And how are you deriving fair price? Like what is the metric in that?
Yeah, so the metrics I use is actually, I use realized cap. So that's actually a way to measure actual dollar inflow into Bitcoin. So actual money inflow into Bitcoin. We look at available supply, so the amount of supply that is available for trade, which we can measure, because there's a lot of supply. Like if you have the circulating supply, so that you're at 19.5 million or something, a bit more. Take all the supply that belongs to like hardcore hodlers out there, and you are left with supply that is a lot more active, that is a lot more traded. So if we look at that tradable supply, because the tradable supply is actually the supply that matters for determining price, that actually affects the market, and so I use that metric, and I also use like a custom metric of coin value days destroyed. That is basically, we look at how much coins are getting active into the market, like how many days, like so once there's a transaction of a Bitcoin, it starts building up coin days. For each day that it doesn't move, it builds up coin days. And so the amount of coin days that get destroyed, they actually reflect how much supply is getting into the market from like basically the hodler cohort. And so based on those metrics, I've been able to make a value map, which is another chart which I'll share as well. But here I kind of color code the spiral chart based on that value map, and I also show the price above and below the surface, so it becomes more visual in 3D, and so you can actually see, this time of the cycle, we're all in these overvalued levels, and then we move, the year after, we tend to move into this bear market, and all the bottoms they align more or less in the same place below the surface here.
Can I just ask a very quick question? What is that fair price that you've calculated?
The fair price currently at the surface is around 75K.
So we're not very far above that at the moment.
We're not very far. We're reasonably. I mean, we're still at 98K, 20K above it. Let's say, like it's still reasonably above it, but it's not highly overvalued. And we can see that actually because if we look at, so it's maybe a bit difficult to see. So we have to look at these dots here. This is it was the last all-time high here. And so this is the current price. And so if we then put the surface, it becomes a bit less visible, but that's the dot here. So it's not that high. It's not as high as...
It's been far more overvalued in the past.
It's been far more overvalued in the past. And so we're currently not that much overvalued. So we have still a lot of time, like the entire year. And we still have like a lot of margin to go a lot higher. Like, if you compare to previous bull markets. So yeah, that's a reason to not panic at all, right? But just to continue, so here in the bottoms, and so these bottoms they tend all to fall together in the same place, as you see, and then we get like a 2-year recovery phase. Here, this was, for example, the 2019. We had a bit of a run up, some early hype in the market that was a bit of an outlier. Here, there's an outlier that was the COVID crash. So we got like quite below the surface, and here this is actually the ETF approval here. So that is also quite a bit, relatively early. So before the halvings. The halvings are those blue dots here that you see. So this is a bit of an outlier, but we had a very good reason, right? The ETF approval, and so now, let me pull up all the price action again. So now we are in the middle of the bull market, right? And we haven't had a reset yet to the short-term holder cost basis. So yeah, I think it's very normal to have a reset, and I still think there's room for a continuation.
Can we talk just briefly before we carry on the charts about the sort of macro environment right now? Because obviously Trump's implemented these tariffs, which seems to surprise the markets, which makes no sense to me because he's been talking about it for months. And on the back of that, the dollar's been very strong. How much of an impact on Bitcoin? Do you think that's the reason we've seen this negative price action in Bitcoin?
Yeah, Bitcoin has become more and more intertwined with all the geopolitical stuff that's going on in the world. And, especially now with institutional adoption, we literally have presidents talking about the, strategic, digital asset stockpile, I should say. But I mean, Bitcoin is really getting in the picture of all the geopolitical madness that's going on in the world, and Trump is causing quite a bit of panic in the markets. I mean, everyone is kind of a bit of in the unknown. Is he going to put tariffs? Is he not going to put tariffs? Uncertainty for Europe. Looks pretty bad as well, and so they're not really even happy with Trump and Elon. And so it's not that strange that the stock prices are affected by it as well, and Bitcoin is as well. So of course, Bitcoin trades 24/7, and so there was a bit of panic on the weekend, and then you got a bit of a flash crash. I think it's normal, but there, so far, as I said, we haven't even reached the short-term holder cost basis, and so there's no worry for me unless we are significantly below the short-term holder cost basis for an extended period of time that we move into a sort of a bear market.
How long do you think the market is going to consider Bitcoin a risk asset? Because it to me, I don't see it as a risk asset. And obviously during this dollar strength and the kind of little bit of turmoil in sort of broader markets, gold's done really well. I would expect Bitcoin to trade more like gold, but it doesn't.
Yeah, I think Bitcoin, obviously volatility always gets in the way, right? Everyone thinks volatility means risk, and so that is just the general confusion, even within institutions. And so that just takes time, but I think people are learning. Like Larry Fink is starting to get it more and more. He sees it as a hedge, and so literally as digital gold, and so. And even more valuable. So it's that's a great start, And I think we just need to be patient. I mean, institutions are people. People come to Bitcoin, they're new. They need to learn the basics, and so institutions are doing that now. That usually takes a full cycle, and so therefore also many people are calling all these high targets like, oh, Bitcoin is going to go to 500K, a million. But I think it's also reasonable, even if we get to 200K, I'm pretty satisfied. I think the most important is that institutional adoption is there, that we can actually measure that it's growing. The same for nation state adoption. And for me, I'm patient to wait a full cycle. People need to learn. Usually, that takes a cycle. I'm just maybe more patient than average.
Yeah, no, I can see that happening. Do you think that kind of we'll see diminishing returns in Bitcoin now? And what do you think that really means?
Let's maybe let me pull up the charts. Wait, just a second.
Because I don't believe in this idea of a super cycle yet. I think cycles will definitely change at some point, but I don't think they're over.
People are talking about, during bull markets, people start talking about, this is the D cycle, super cycles all the time. Like that has happened the previous cycle and even the cycle before. So it's very tempting. And it could happen, but actually, I also think, as I said, I think it's better to be patient and maybe, let's wait 5 years. Let's give these institutions at least a full cycle. I see now, it's because I'm analyzing institutional data. So I'm actually, I gathered all the 13F filing data, and I'm actually now looking into institutional holdings, and we're going to get to that chart as well. But what I see still is, just to give a primer, it is very small allocations. There is and these are 13F filings are all institutions that have at least 100 million in assets under management, and so they have allocations from 0.1, even from 0.001. There's a few that have a bit more, but I think the average, and I just had a quick look yet. I want to put this into charts as well, but and to also be able to measure these things. But it's still there's a lot of room for growth.
Yeah, they're just tipping their toe in for now.
Exactly, yeah, and so that's why I believe we need more time.
So I think this is what you're saying. You think institutions are going to get scared out of their position in the same way retail does?
institutions, yeah, maybe they're not as they're all susceptible to hype. I mean, we're all people, and institutions are made out of people, and they don't understand Bitcoin yet, and so. Yes, some will, some won't. Just as people, and we see the same thing actually happening in now the politics. I mean, look at Trump. See all the shit coins or the altcoins. People are talking about XRP, ETH, like is going to be added to the digital stockpile. You get all the shitcoin. Why do we get the shitcoinery at that level? Obviously, because they're also new to Bitcoin, and just as everyone new to Bitcoin, they start with shitcoining, and so it's just also at it's no different at those levels.
What Bitcoin did is brought to you by our lead sponsor and massive legends, Iron, the largest Nasdaq-listed Bitcoin miner using 100% renewable energy. Iron are not just powering the Bitcoin network, they're also providing cutting-edge computing resources for AI, all backed by renewable energy. We've been working with their founders, Dan and Will, for quite some time now, and have been really impressed with their values, especially their commitment to local communities and sustainable computing power. So whether you're interested in mining Bitcoin or harnessing AI compute, Iron is setting the standard. To find out more, head over to iron.com, which is IREN.com. This episode is brought to you by River. There are many places to buy Bitcoin, but there's no exchange like River. They have innovative products, phone support, and a dedication to security that you just don't get elsewhere. With River, buying Bitcoin is easy. You can set up 0-fee recurring buys to automatically stack sats, and River also lets you earn daily Bitcoin interest on your cash balance that outperforms most high-yield savings accounts. With River, your Bitcoin is stored safely in multi-sig cold storage, plus you have peace of mind knowing they do monthly proof of reserves and hold all client Bitcoin that wasn't withdrawn to self-custody. Open an account for yourself or your business at river.com/WBD, which is RIVER.com/WBD.
Okay, let's get to this chart.
Yeah. So I thought it was maybe a nice way to start a bit more with like the more global trends. Bitcoin macro. It's tied to macro, and maybe also talk a bit about Trump. And so because the dollar has been moving up, actually, I was expecting that it was going to move down already. I put that arrow here. I was hoping that it would start to go down, because we see historically when dollar is getting weaker, that we get actually the most strong bull markets, and because there's more liquidity that moves into the market, and so there's more of that liquidity can find Bitcoin as well. People tend to take more risk in those situations, and but since Trump placed tariffs, actually we got this pullback here. We went back up. DXY is moving up again,
strength, yeah.
And so we don't know, are we going to get a higher high there, or is it just temporary? And there's just a lot of confusion about Trump and what he's going to do. And so I think for that reason as well, we're currently seeing a bit of more consolidation within Bitcoin, but we actually only recently had an all-time high, and so it's literally been a week, or I stopped counting, but it's not been that long since the last all-time high, and so but indeed everyone is suddenly bearish because everyone is just influenced by the current the current thing that's been discussed on Twitter, or that's going on with Trump tariffs, and this is bigger than Bitcoin. I mean, this affects the stock market as well, and so it affects Bitcoin as well. And so I think once there's more clarity around these things, which we will get in the next weeks or so, I think the market will also readjust. And if in the meantime we can get a reset to the short-term older cost basis, that would actually be fantastic. It also shouldn't take too long, all these things. But we'll get into that in a little bit as well. But maybe to talk about the presidency, because here in this chart, we're actually looking at the market cap growth per presidential term, and it's actually the cumulative market cap growth. And just what I wanted to highlight is that I think it's important to understand, because people are indeed bearish currently because Bitcoin price isn't doing yet much, but if we think about the past, we had like extreme market cap growth in those in the first halving, the second halving, or in the Obama term, in the first Trump term. But then in the Biden term, we had this choke point 2.0. We had a lot of restrictions, and they're actually all coming out now, right? There was so much going on that was anti-crypto, anti-Bitcoin. That it's not strange. Banks were, all that hindrance is gone now, and so that's why again for the next 4 or 5 years, I'm extremely bullish for Bitcoin. Also in the coming months, I'm bullish for Bitcoin. But we could see, a typical bear market, maybe not as severe this time, because it depends also on how high we go, what we do, and it also depends on macro, what's happening there. But I don't expect, to your question, to surpass market cap growth of the first and the second cycle. Like that would be ridiculous. Those were early days. The market was a lot smaller. You could move price up a lot faster. There was a lot less capital needed. But if we look at the Biden term, I think it's actually possible, because we have diminishing returns, but since that that top here, the 69K, it felt muted at the time, and we also know now, like, okay, there's many reasons why it was muted. I'll get to some more in a little bit, but so I don't think it would be strange to at least equal the previous cycle in terms of market cap growth. But it's, of course, we will have to see over the next years.
Which would get us to what, about 6 trillion? Is that on your chart?
I think, let's see. So it's 3x from here. Indeed, we're at 2 trillion. So 6 trillion. I think that's it's possible. I'm not saying it has to happen or it will happen. We will see. We'll have to give the institutions a bit of time as well.
It's interesting that you have choke point 2 as the main driver of this, because obviously a lot of stuff happened last cycle. Do you think that played like an outsized role in the...
Yeah, I put a choke point 2.0 here to kind of highlight the problems with the Biden term. But there were many reasons why the last cycle was why we had a muted top, and some of those reasons, for example, we can get to the next chart as well. Available supply. So if we look at the supply that's available for trade, because Bitcoin had a high inflation rate in the beginning, actually Bitcoin was becoming more abundant until the third halving. And then we started to flatten out. And that's why also I like to call these first 3 cycles of Bitcoin, that was more of like an initialization phase, where we're actually now getting more to the point where digital scarcity is materializing. And, the pace of that, I mean, it's still like, I don't know. So I've been trying to model this. This is what the HODL model is. And so I have 2 models, like the S version, which is more optimistic, and the normal HODL model. But if we look at the current levels of supply, for example, we're still more or less similar to what we were in the third halving. So still Bitcoin is relatively abundant, and so but because we were more or less at the most abundant moment in history, in Bitcoin's history, around that bull market, it's not so strange to see a muted top, especially combined with no ETF approval, so no gateway for institutional money that had to flow in. Choke point 2.0, like debanking of crypto or Bitcoin focused companies. All of that happened in this cycle, and so many reasons why this top was slightly muted. And the positive thing is that now all of those hindrances are gone. And we're still at fairly high supply levels, but of course,
which is just about 5 million coins, roughly.
Yeah, according to this measurement.
And what's the difference here between your HODL model and your HODL Model S? And just for anyone listening, the HODL Model S shows a more severe drawdown in available supply.
There is another chart where the S curves becomes more visible with the HODL Model S. But they're very similar in what they do. One is just a lot more conservative, and there's more ways to model supply, right? So I actually started with the conservative model first, but then since supply was going down rather steeply, I also created a more optimistic model. But it's more, I don't think also it's extremely predictive in a way, these models. But it's more of like a macro trend within Bitcoin that I think is necessary to understand. because so on one hand we have diminishing returns with like a growing market cap. No matter how you measure, if you measure from bottom to the top or from peak to peak, you get less returns and due to growth of market cap. But on the other hand, we're now getting into a situation where actually Bitcoin's scarcity start materializing, and so that is an upward pressure. Now, it still goes combined with the diminishing returns, and so I don't know which force is the stronger force. If we see the U.S. creating a strategic Bitcoin reserve tomorrow, and they're going to start buying, loads of coins, it can go very fast.
And similarly with like MicroStrategy, obviously they play into this Model S version. And if we have a lot of companies come and follow their playbook.
Exactly, yeah. There's a lot of like, it's going to be kind of like passive demand almost for Bitcoin. Like with now these gateways open from institutions, we have all these ETF products and derivative products. At some point, some employee is just part of his salary that is saved for his pension. There's going to be suddenly some allocation to Bitcoin due to some ETF that pension fund has, and so there's all of these, and MicroStrategy indeed. If countries start adopting and really start competing to buy Bitcoin, it can go a lot faster. And so there's the S model, which is the fast variant, and the more conservative model. But it's to me, even it doesn't really matter that much which model you look at currently, at least. It's more the idea, like to understand the trend, like because we always say Bitcoin is digital scarcity, but in the first three halving, that wasn't the case. We actually had a lot of a high inflation rate in Bitcoin. Similar to, for example, the inflation we had in COVID. Suddenly the supermarket is twice as expensive. Why? Yeah, well, because they added 40% of new money. Well, that actually also happened in the early days of Bitcoin. And so supply was getting more abundant.
I guess to add one more thing to that as well, if we do see sort of large banks offering Bitcoin collateralized loans, that's another thing that takes sort of sell pressure off the market.
Yeah. I wish that was here already, personally. But I think in the U.S. there's a very big chance that will happen in the coming years. In Europe, it's going to take probably a little longer, unfortunately. I hope they can change their mind as well. And so, I'm very optimistic because the U.S. is always a bit of an example to Europe. I hope they can stay an example for the next 4 years regarding Bitcoin.
Completely agree. All right, let's see the next chart.
Yeah, so maybe we can get a bit more into current price action. We're just saying, so the short-term holder cost basis is at 92K, Bitcoin 98K or a bit less, I guess, current price. But
is this almost the most important metric to look at because the short-term holders are the ones most likely to sell?
Obviously, like many metrics, like if you want to look into current price action, all short-term holder metrics come into play, like short-term holder cost basis, short-term holder supply in general. And so I have some more short-term holder momentum. I'm going to have another chart in a little bit. But indeed, the short-term holder coins are more susceptible to price action, and therefore that's the metrics you want to look at for short-term price action. So see here we look at it, the short-term holder cost basis in standard deviation, so how price fluctuates above it. And so, as I said, this is actually the ETF approval. So we had these all-time highs here, and that was actually an all-time high before the halving. That never happened in Bitcoin's history. An all-time high before the halving. Obviously, it was due to a catalyst, and we were quite overextended here, and therefore we got also a bit of a more fierce pullback that took just the higher you go, the bit of a longer consolidation you have, and currently we reached those levels again. So we could get a consolidation like this, but also it's very common to see to just bounce off the short-term holder cost basis during bull markets. And because during bear markets, short-term holder cost basis is resistance, so you can see that price kind of touches it and then falls below. But then once we move into a bull market, we start bouncing off it. And with some consolidations are slightly more severe. That I blame in this case, for example, on a bit of the early hype that wasn't sustainable due to the ETF approval. And but now it seems to me like we're just healthy on track. actually, I hope we would get a proper reset of the short-term holder cost basis and bound off. That would be quite bullish, because if we don't, the longer we don't touch it, the longer there hasn't been like a proper flush of the market of weak hands. And so to move significantly higher, it's always healthy to get these resets.
When you, I'm sure we've probably got this in the chart, so I might be jumping ahead here. But when you compare this cycle to previous cycles, the one it's most similar to is 2017, which was before we had loads of derivatives and things like that on Bitcoin. It was much more spot driven. Do you think this time is the same because of like ETF buying pressure? And do you think that's another reason we won't see big sort of drops below that short-term holder cost basis because there's less leverage? Or am I over my skis there?
Yeah, no. So actually, for example, with Sailor also buying all these Bitcoin, there was I think significant price got also muted to the downside. We haven't seen a severe pullback. Everything got bought up constantly, and so I indeed think with institutional adoption, the amount of Bitcoin we have seen flowing into MicroStrategy is reducing so far downwards price action. Now, I don't know, for example, there was now 1 week that MicroStrategy didn't buy, and we got this more of a reset suddenly, so it's it shows that these significant amounts of Bitcoin should be bought constantly to keep up with these price levels.
Mm-hmm.
Yeah, maybe we can switch to more of the momentum. So this is a metric I've also shared with my subscribers, where we also try to identify this short-term holder momentum that's going on, and have these red lines. Those are like the bigger pullbacks that you would see during a typical bull market, and you can see these green spikes. And so actually, what I look for is when this green line starts moving down at a certain fast pace, then I'll draw one of those red bars. And so far we had two of those as well. And so you see in 2017, you were just comparing it to 2017. I think there's a lot of similarities to 2017. But so we also had like two of those pullbacks before we made an actual top. The same actually in 21 cycle, although I think the actual top of 21 was more this all-time high than the last one, due to being a lot more hype in this part of the market than here. This was actually based on conviction, this all-time high, which is also very, very bullish, because even if we would just all have conviction and no one would sell, we could still make all-time highs, even though if no new entrants are coming into the space. So to me, this is actually exceptionally bullish that can happen. And so with institutional demand growing and all these things, I think that might be more reasonable to expect also here at some point.
The interesting thing to me there is that in the previous cycles, it seems like those red bars you've got in there, the pullback signal, are quite late in the cycle. This could age like milk, but it doesn't seem like we're that late in the cycle this time. Have we had those earlier than normal?
Yeah. So actually, for me, this red bar around the fourth halving was a bit of an exception, and so we see also because we had such a spike here of hype, we had, this was the ETF approval again. We also got this downside, which I showed in the previous chart as well, just because there was too much hype, momentum went up too strong, and so we got a bit of a fiercer pullback than we would usually get. So, if that ETF approval wouldn't have been there, it would have probably been a more gradual upgrind, and so we wouldn't have had this extension here, and we probably wouldn't have had the downside here as well. So if you would think that this is a little not as low as it hits here, and think away this spike for a little bit, then it starts to look a lot more like 2017, of course. But yeah, there's all of these, there's always catalysts that cause this hype and every bull market. So I still want to take it, I don't want to just consider that this one doesn't exist. But yeah, I think there's still room for more upside. There's two pullbacks, and we had two of them here, but it doesn't mean that the bull market is over. What is worrying me a little bit though is that on this downward price action, we've been kind of we went down, then we had a bit of resistance, we went down, we had a bit of resistance, and so it's starting to move back down, which that to me looks more typical like a distribution phase. So like maybe some more similar to the top we had here in 2021, which could indicate like a bit of a longer consolidation. I don't know why that is. Maybe that is also because like Sailor were buying the dips, like so there was a lot of institutional BTC flowing in that was buying the dip, and so we get a bit of a slower pullback than we would usually get.
But presumably a longer consolidation here wouldn't necessarily be a bad thing. That might actually be pretty bullish, right?
Yeah, but it depends though. So let's now look at short-term holder supply, which I think is a very important metric in regards to making a cycle peak. So if we look at the levels of short-term holder supply, we've been moving up quite fiercely. And the reason why I don't want this consolidation to start taking too long is because this could start like falling over, right? And so once we start to move back down, it's very hard. Once hype starts fading away, it's very hard for hype to come back. Typically it takes a full cycle, and we see a similar pattern here in terms of short-term holder supply. We have a bit of an early hype in the market, for example, here and around the second halving. Then we get here a year of uptrend. So 2017 was actually exceptional, a gradual bull market up that took a very long time. Here in 2019, we had a very early hype in the market during the 2019 peak. And then it took some time to recover from that. And then we had a 7-month, up period, and which was most of the bull market. And that's, again, this metric shows also that the first peak here, that was actually the real all-time high of the real cycle peak, even though we made all-time highs here.
Yeah, there was no hype then.
There was no hype then. That was more based on long-term holder conviction. Now, the same thing we have here we have actually the ETF hype, so early hype in the market due to ETFs. Mm-hmm. And now, so far, we have been 4 months into this. So it depends, like, okay, is this going to take 7 months? Then we only have 3 more months to go, or is it going to take a full year? We have a little longer, 8 months. But it starts to be reasonable to assume, looking at this chart, that perhaps a top could also form within the first 2 quarters of the year. And so I'm not entirely convinced yet that it has to be Q3 or Q4 of 2025.
That's interesting, because typically in Bitcoin, Q1 is generally not great, and towards the end of the year tends to be better. So do you think that kind of thing could break? Yes,
we actually saw a bit of that as well in the previous cycle. So we had very early hype. If we look here at this peak here from the distance from the halving, that was quite similar to what we're currently at.
Yeah.
And so in 2021, we actually had it was Q2 of 2021 that was the peak, where Q4 was like a higher high that we made, but hype was gone. And so the same thing could happen here. And since we're moving up now, it's likely to continue to move up. And we don't have to make, as I said, we discussed with the Biden term. So in a way, this perhaps was also muted, the muted top. So it could be that this, outpaces or goes up far above the peak of 21. I don't know. That's yet to see. But this is a very important metric I continue to track. It tells me when hype is gone, and when hype is gone, usually that is the end of the real bull market. We can still make all-time highs as we saw here, but it's not going to be probably significantly higher anymore. Like the exponential price action will likely be gone then.
So this is interesting, because we're talking about this short-term holder supply as hype, but the price going up will always make that chart turn over, right? That metric turn over, because like as price gets higher, short-term holders can't buy as much Bitcoin with the same amount of money. So the only way that could continue going up is if bigger money was coming into the space constantly. Is that right?
Yes, more money needs to come into the space. That's why also we get to overvalued levels, and those become unsustainable. That's why you get a peak. But indeed, short-term holders cannot buy as much. that is true, but also the amount of short-term holders usually increases, right? So there's more and more hype. So more and more people get excited until you get like a blow off top. And so indeed, more money needs to come into the space. But each new all-time high also is an incentive for long-term holders to sell. So it's basically what this tracks is also the supply that gets bought up here is basically the short-term holder supply. It's new entrants coming into the space. They buy supply because of all-time highs. Long-term holders are willing to sell some of their coins, and they get into the hands of these new short-term holders.
This episode is brought to you by Casa. For those of you out there who want to protect your Bitcoin, I want to tell you about Casa, the leading Bitcoin self-custody solution. If you're serious about protecting your Bitcoin, then you need a rock-solid security plan, and Casa gives you just that. With their multi-signature security and key management services, Casa makes it easier than ever to take control of your Bitcoin without the risk of a single point of failure. Casa also now has a private client option, which gives you a purpose-built security program with ongoing advisory, advanced verification inheritance, a 24/7 security emergency line, and lots more. To find out more about Casa's private client solution, go to casa.io, which is casa.io. This episode is brought to you by Ledger. If you're serious about protecting your Bitcoin, Ledger has the solution you need. Their hardware wallets give you complete control over your private keys, ensuring that your Bitcoin stays safe from hacks, phishing, and malware. With Ledger's easy-to-use devices and the Ledger Live app, managing your Bitcoin has never been more convenient. Whether you're a long-time holder or new to the world of Bitcoin, Ledger makes it simple to keep your assets protected. If you want to find out more, visit ledger.com and secure your Bitcoin today. That is ledger.com.
What have we got next, Root?
Yeah, so this is the value map that I was talking about earlier. So this is it basically shows the same as in that spiral chart where I said the surface is at 75K currently, and like these highly overvalued levels are currently at 175K, and we're now a bit in between. So we're a bit less than overvalued, but we're higher than fair value currently according to this metric. And so what I just want to show here, I think, there's more room for upside, as we already concluded as well in the spiral chart in the beginning. We haven't seen really these extreme high extensions to highly overvalued levels. And so I still expect that to happen, and that could happen in the next months till basically we have till the end of the year according to the 4-year cycle. And so I'm still patient till that will happen. Now, if we would really start falling below fair value, that would be worrisome. But so far there's no real reason to expect that, except if macro environment turns really wild with a recession, and even then Bitcoin could be the hatch. But it depends. I don't know how the market is at the state. There is institutional adoption of Bitcoin going on, but I don't know at what stage they're in. Do they really believe Bitcoin is the hatch, or will they still be scared out due to volatility? That is to see in such a scenario.
Yeah, that will be really interesting to me whenever that happens, because obviously we all talk about Bitcoin as like the store of value thing. I think it's more than that, but store of value. But the market still treats it like a risk asset. And when sort of macro headwinds are going against every risk asset, it'll be interesting to see how the market reacts.
Yeah, in a way, it would be an extremely cool experience. Maybe it's not as fun in terms of volatility for the Bitcoin holders, but I think what is likely in case of a recession, perhaps initially Bitcoin will drop, due to fear and due to volatility. But then I expect actually weak hands to get flushed fairly fast, and then Bitcoin to come out as the actual hatch. And so
I guess similar to COVID in that sense.
Yeah, similar to COVID in a way, yeah. And so another chart to see that why we still have upside, is just the classical MVRV, so market value against realized value. So the blue dotted line that you see is actually the realized price here. And the pink line is the actual Bitcoin price, and so we look at how far does price extend above its realized price. So realized price is the average purchase price of all Bitcoin, and I see. So if we look in terms of standard deviations, so I drew here these green zones. Those are if we are like 3 standard deviations above that above realized price. And we see like fairly large amounts of those green zones in bull markets where, as currently, we have seen very little. And so, again, that is one of those charts that shows like, okay, there's still a lot of room for upside.
Mm-hmm. Very cool.
Then actually the last chart to finish with, I wanted to, come with like even more cool data, but I haven't been able to.
I sprung this one on you.
You contacted me relatively fast, and we went on a call right away, and so there was little time to prepare for like proper charts. But I wanted to talk a bit more about institutional adoption because I've been analyzing for the past days a bit. I've been gathering, better said, like 13F filings data from institutions, and I've been trying to estimate what are the Bitcoin holdings from these institutions if we look at the ETF holdings, for example, because since 2024 we have now the ETFs live, and so there's how much is retail, how much is institutional adoption, because institutional adoption is an extremely important driver for the continuation of this bull market, and so that's why I was interested in it, of course. Now we started with the ETF approval with around 600,000 Bitcoin in holdings, and that was mainly due to Grayscale. And so we see the part of Grayscale here. But then BlackRock, since BlackRock has now overtaken Grayscale, Fidelity is even larger than Grayscale at the moment. And so Grayscale is currently the third largest. But we basically went from the beginning of the ETF approval from 600K to 1,175K. Let's round it to 1,200K. So we went up nearly 600K during that year, and
basically doubled.
It basically doubled, yeah. But we went up 600K. And if I look at institutional adoptions from 13F filings, and I calculated all the holdings that they have, and I converted it to Bitcoin, I got around only 170,000 coins, and this is data that goes actually only until 2024. So because Q1, it's still until Q3, I think, if I remember correctly. Yeah, I believe it was Q3. So Q4, because these institutions actually have a 485 day time span to file these holdings. And so on February 15th or so, we could expect the holdings to come in the latest. They can also be faster, but many of them wait until those last days to file those holdings. And so on February 15th, we will know also the data for Q4, which I expect to be more bullish than Q3 of 2024. But measured from Q3 2024, so that's actually only the first 3 quarters of 2024, we had about 170,000 coins of inflow into actual institutions. So and these are institutions that are at least have 100 million plus of assets under management. So this does not include smaller. There's probably many institutions that are smaller than that also have a Bitcoin allocation that they're not obligated to file, and so that's it's the data we have. But at least this gives us conservative estimates of institutional holdings, and so so if we think that those holdings are conservative, then it's about, in my opinion, 30% of the supply that has been bought since the beginning of the ETF approval was institutional adoption. And 2/3 is probably still retail. So as I said, there's a lot of room still. Institutions are only tipping their toes, and they have. I've not made a chart on this. I want to make a chart on this as well, and to track actually the average allocation that they have, because that's very interesting to me. Because BlackRock is now advising a 2% allocation to Bitcoin. But actually, in the data, I see that many of them only have like 0.1 or 0.001 or amounts like that, and so there's a very small part of their portfolio. And so I would like to start tracking that data. And more of those charts are going to come out soon as well on my platform. And I think that will give additional views on institutional adoption, which I think is a key driver for the continuation of this bull market. So,
have you been surprised to see how few net outflow days we've had on the ETF? Because that's something that I didn't expect.
Yeah, indeed, but we're also, of course, in a bull market, so there's less outflows. But you see that also ETFs are also susceptible to price action, because if there's a consolidation, a bit of a more reset, even now, today, these days, the inflows are minimal. And so, institutions and retail that is in these ETFs are susceptible to price action as well. But in a bull market, there are less down days than up days, right? Most of the days are up, and we see that as well in ETFs.
And do you think they're going to behave similarly to retail when it does come to the next bear market?
So I think they're going to be more of a passive demand for Bitcoin, because it's often someone else's money that so you're not
it's
as
a bit easier.
It's a bit easier. You're not as fearful, right? So I think institutions will have more patience, but it's yet to see. I mean, we have seen examples like Elon Musk, who sold actually a big part of his holdings, which would have now been worth a lot of money if he
was just testing the liquidity route.
Yeah, exactly. Yeah.
What I'm really curious about is what this demand looks like going into a bear market, because I know you're saying they're still going to be susceptible to price, but if we see this really drop off, do you think that could kind of break the idea that we don't have as much downside in the following bear markets?
Well, I think there's going to be part of the supply that is slowly going to be really passive demand. As I said, like I gave the example of the employee that's, suddenly some of his pension funds are like allocated to Bitcoin. That is not going to be sold. And so there's going to be more and more of that, those allocations are going to build up, and that's going to be quite a big amount of, it's going to be illiquid supply basically, and it's not going to be, so it will make available supply go down. And so we're actually seeing available supply move down, and also according to the HODL model theory, let's say, available supply looks like it's going to move down, like that digital scarcity is going to materialize. And so actually these kind of trends like passive demand from Bitcoin will help with that. But I don't know, if available supply starts moving down, it can also start increasing volatility again, because we have less supply available for trade. And so, I don't know. But I think volatility is here to stay for Bitcoin for quite a bit longer. As I said, I prefer to be patient. I think we need to give institutions a 4-year time window as well. They're only tipping their toes, as we've said a few times now. Let's see how we are in 4 or 5 years, especially with the current administration. So I think, that's an extremely bullish outlook for Bitcoin, because we actually have we even have 3 pathways to a strategic Bitcoin reserve. We have and so that could be, by the way, that could be a major catalyst for maybe having a top in Q3 or Q4 still, because Trump in his executive order gave a 180-day time window for research about this digital asset stockpile, which should be somewhere at the end of June. No, at the end of July, I think even. So that's the end of July, and so that could be if there's really then going to be a strategic or a Bitcoin stockpile or digital asset stockpile, which hopefully then they conclude that Bitcoin is the best to put in there. That could be a major catalyst for the second half of this year. So that is something to look out for. But at the same time, Cynthia Lummis's bill is another way to create a strategic Bitcoin reserve, because Trump's plan of this digital asset stockpile is an executive order, but that is not put into law as I understood it. And so the bill has to move through Congress and all these difficult paths. But once it gets accepted, that would really be written into law. And so that, and besides that, we also still have a sovereign wealth fund that Trump put up, and it looks like a good fund to put Bitcoin in as well. So there's actually 3 ways for them to add Bitcoin, as a strategic reserve asset. And so yeah, that is very optimistic to me. And so probably that will have a big effect as well on what happens there for the continuation of the bull market in the second half of this year.
Yeah, with David Sachs, our crypto czar, or the US's crypto czar, I'm less bullish than ever that it's going to be Bitcoin only, but we'll see. Hopefully.
Yeah, as I said, they're new to Bitcoin. There's 40%. Bitcoin's dominance is around 60% or so. So still 40% of the people are are pro crypto, or they are still into crypto, and the thousands of cryptos that there are. And so unfortunately, some of them also are into politics. But yeah.
So to close out, if we looked into Root's crystal ball, what do you think is going to happen this year?
Of course, it's very difficult to predict the future. To me also, I've always said this, on-chain's strength basically is to look at what is currently going on, understanding the dynamics of the cycle, what are the macro trends, what is short-term trends, what can we expect of short-term price action. But in the next couple of months, based on the data as I see it now, considering the charts that we looked at today, so a bit of a summary of what we've seen here, like thinking of, for example, short-term holder supply, it looks very likely that we could peak in the second quarter, for example, of 2025. May there be a catalyst? As I said, it could continue into Q3 or Q4. Basically, have the time until that. And my prediction remains still relatively conservative. I know there's people calling, people get excited when it's a bull market, and I'm excited. I actually am more bullish, and my conviction of Bitcoin keeps growing every day, and especially with the trends that we're currently seeing. To me, they're amazing, and so, but we need to give it time, like a 4 or 5 year period. Institutions are only just starting. They need a full cycle to understand Bitcoin better. We've seen it with El Salvador as well. They started stacking in the previous bull market, and then they were blamed in the bear market for like all their the bad things that they did, and now they come out as kings, right? So that also will happen with institutions. We need a full cycle of that for institutions to understand this as well. And so I remain relatively conservative. I think a 200K Bitcoin price, like I would be satisfied with that, to be honest. But it very much depends on the indicator. So I'll continue to look at things like the value map, how overextended are we in MVRV, and all those kind of metrics. Also short-term holder supply, how is the momentum going there? And so we will have to continue that. And that we can only do on a day-to-day basis.
I love it. I think I'm more bullish than you, but we will see. I'd take the over on that bet.
I hope you win. I mean, I'm also not saying it's impossible. But yeah, it's just based on the current data that I see. But it very much depends. I mean, if we get a catalyst, like, imagine it's the end of Q2 or beginning of Q3, and we indeed got the digital asset stockpile, and it's going to be 80% Bitcoin or something. Bitcoin price will, move up enormously on that news. And so, those things can change the dynamics, and it's usually hype that makes like a peak, right? But I'm more interested in gradual growth because even that won't be as sustainable. We'll get a peak and we will crash, and then we will start moving gradually up. But I think, all the ingredients are there. We have institutional adoption. We've been talking about institutional adoption since 2013, but it's here. It's measurable. They're only tipping their toes. It's true. They're small allocations, but it's growing, which is important. And so we have even nation states adoption, which to me is even a cycle early, but it's already here, partly to blame on El Salvador. They started early. And so now the US is talking about it because it's game theory, right? And so, I think all the ingredients are here for Bitcoin to succeed. But a little patience is needed, in my opinion.
All right. Well, thank you for that, Root. Appreciate you going through those charts with us. Is there any way you want to send anyone before we close out?
Everyone can check out, of course, my newsletter. It's bitcoinstrategy.substack.com, and my platform, bitcoinstrategyplatform.com, where I've been sharing my newsletter on a weekly basis. We've been actually discussing all these topics each week, and so far I've been pretty much on point. I don't want to brag about it, but based on the data that I've seen, we've kind of been on track, and it's been a comfortable ride so far. And so if you want to also see the institutional data that I'm going to put out, a lot of charts, please check out my platform or my newsletter.
Perfect. Well, let's catch up at the end of Q2 and see where we're at then.
Thank you so much for having me, Danny. It's really cool to see you continue what Bitcoin did. It was my favorite podcast always. So
thank you. I appreciate that. Hopefully it's still your favorite podcast, but
I've watched your Lynn Alden show and it was great. So it's I'll continue to watch your shows.
Love it. Thank you, Root. I'll speak to you soon.
Thank you, Danny.